But at first, I just wanted to go through the list here. This is how much money has been raised by each of these IPOs. Klarna, by far and away, that is the biggest at $1.37 billion raised. That's not the size of the company. That's how much money they raised at their IPO. Then you have Zenta, very small, $6 million. That's a fintech, very similar to Klarna in that it is fintech. And then you have Figure, that's blockchain plus fintech. They raised $787 million or thereabouts. LB Pharmaceuticals, as you might guess, that is a pharmaceutical play in the biotech space. And then we got BlackRock Coffee Bar. That is a pure consumer discretionary play. That's retail, raised $425 million. And then 294 to Gemini. That's a crypto and a little bit more fintech there. And then finally, Via Transportation. I guess I would call that transportation tech, and they raised almost $500 million right there, $492.9 million. And if you take a look at the opening day pops here, and I do have a little bit of issue with some of this and the reason that this has become the benchmark, but then this is in fact one of the benchmarks that Wall Street uses to gauge how hot the IPO was. So you take the IPO price, which is set the night before the stock actually begins trading. That's where all the insiders get into the stock. And then you measure the opening price the next day. And usually that's sometime between 11 a.m. and 1 p.m., sometimes even a little bit later. You're going to notice there's kind of a sweet spot here right around 30%. And so a lot of these pops kind of settle in that area. You got Klarna at 30 exactly, BlackRock Coffee Bar, Gemini Space, a little bit north of that. Figure was a big standout yesterday, 44%. And then Via Transportation opened a little bit under its IPO price, though I should say it's trading above it right now. And that's really what I'm talking about here, is that it matters where you close the day from the relative to the open, because most people are not going to get at that insider's price, which is the IPO price. They're going to get at sometime either on the open or after that, and then they're going to make that money into the close, or they're going to lose money into the close. So next week we'll be able to kind of filter out and see which one of these was actually profitable for investors. But in the meantime, I just wanted to show you a chart here of US IPO deal value by quarter. This goes back a whole decade, and so you'll see this huge peak in the middle. I showed this yesterday. That's 2021. That's the era of free money when we had all that fiscal and monetary stimulus. And you're going to see there was a huge crash. We had a bear market in 2022. Fed was aggressively raising rates. Cost of money went way up. And so we crashed. But now we've just been kind of stair-stepping higher. And we are kind of almost back to the pre-IPO era. And things have definitely heated up here, and it's catching a lot of eyebrows. But I would issue this little word of caution. Before you jump into a new IPO, consider this stat. 90% of all IPOs undercut their first day of trading price within the first year. And so you usually get a pretty good opportunity to get into these IPOs at lower prices than you see in those opening days. Now I'll send it back to you on that.
All right, thank you, Jared. Join me now from the floor of the New York Stock Exchange. We've got Sebastian Siemiatkowski, Klarna CEO. Sebastian, it is great to see you. Congrats, Sebastian, on the big day. Walk us through, Sebastian, what this day means for you, Sebastian, for the company, and why go public now? What were the variables, the factors in that decision?
Look, it's been obviously, due to the very troubling news just recently on Charlie Kirk, I'm a little bit not in the celebratory spirit I was previously, but it's been obviously a fantastic day. I'm very happy to see that, we came here and for our employees and for the long believers that have been investors in the company for 2 decades, that seems to be what was a very successful day with good trade and well-receptive market has received us very well. So we're very happy.
Charlie, Sebastian, I want to acknowledge also, to your point, Charlie Kirk, and obviously our thoughts and prayers are with him and his family at this time. For you, Sebastian, you think about this market opportunity. I'm curious how you think about it, how big the opportunity is, and how fast it could be growing.
Sure. Look, Klarna is now at 111 million users, which is pretty amazing. We've been growing, and our main focus for the last decades have really been how do we reach as big of an audience, how do we get as many users as possible, and then more recently, we've been starting focus on how do we sell more services and increase the revenue per user, right? And so you look at us compared to some of our competitors, there are 1/3 Affirm is like, I think, 30 or 25 in total. We have Revolut in Europe that is 40, 50 million users. Klarna at 111 million users, but our revenue per customer is lower, and that's where the big opportunity is. That's why we're very, very happy to see, for example, we launched a card just 6 weeks ago here in the US. We now have 700,000 users, 5 million people on the waiting list. So we see a lot of opportunity on how we can bring more financial services once we have established that relationship with them and they use us for a buy now, pay later at Sephora or Macy's or Walmart or eBay or all the merchants that offer Klarna today.
Sebastian, for investors who are listening right now, why should they put money to work, Sebastian, in Klarna rather than your rival Affirm, which analysts are quick to point out, Sebastian? Affirm, they say it's growing faster and it's more profitable.
Well, I think that the truth is that, like, if first and foremost, I haven't sold a single share today. I'm a big believer in the company. I'm a big believer in the opportunity. Klarna is a very different business. Our focus has really been about growing in the pay in four space on the everyday transactions. You've seen us sign Uber, you've seen us sign DoorDash. Our experience is that the most critical thing is to build relationship with a lot of customers. We have more customers than Affirm here in the US as an example, and more globally. So first we build a relationship. We know this from Europe. We build that relationship. We become an everyday spending partner for the users. And then we can start upselling, whether that's fair financing, longer term financing loans like Affirm does, or whether it's other services like subscriptions and cards and other offerings that we're doing in Europe. And what we see then is that people really love those. If you look at some of our card users, our revenue per user there is 5 to 10x higher than the standard user. So that's a huge opportunity here. But our main focus has been growing number of users, and now we're coming into the monetization.
One question I hear asked, Sebastian, and I'm curious to learn more about this, and to make sure I'm understanding correctly, is that you all go to Pagaya to help underwrite long-term loans in the US. I'm curious why you do that, why you outsource that, Sebastian, because it's pointed out that Affirm, they don't do that. They actually own the underwriting IP.
Yeah, that's not entirely correct. So what happens is that Klarna is a bank. We're a fully regulated bank, different than Affirm. And we put most of our loans on our own balance sheet. We underwrite them ourselves. That's also a very big difference. And if you look at it, is that, like, because of that, we recognize the provisioning of our loans directly, while the revenue comes over a longer period of time. Affirm is selling off about 50% of it to partners. Pagaya is a great partner, a small partner. A small proportion of our loans in the US are underwritten by them and given them, but the majority of all the loans are underwritten by ourselves. 97% of our loans are 0% interest bearing. And we have been doing underwriting for fair financing and for longer term tickets for 2 decades. So it's not entirely correct. We do most of it ourselves. Most is on our own balance sheet. But that also means that as we grow now quickly the fair financing product, as we grow, for example, one Walmart and start working with Walmart away from Affirm, this means that we will see a growing amount of those loans, and the revenue will come over the coming quarters because it's more profitable. Our funding with deposits is just much cheaper than selling it off wholesale like Affirm does.
So just so I understand, Sebastian, so when you're assessing the risks of making